Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have with us Stephen Ng, who's the founder of Stephen Ng Financial Group, and we'll be discussing how to grow and protect retirement wealth. Stephen, welcome to the program.
Yep. Good morning, Mike.
Good morning. Hey, thank you for being on. I always love learning from people and hearing perspectives from life experience, professional experience. And I think that anyone would check the box and say, yes, I want to learn how to grow and protect retirement wealth. But before we dive into that, give us a little bit of your story and your background and how did you get into financial services in the first place?
I got into this business as a financial advisor in 1992. My dad obviously had a huge influence on my life, and he no education whatsoever, and he was born in Singapore and all that. Made a lot of mistakes in his business, and basically from my dad's mistakes, I learned a lot. And when I became a financial advisor in 1992. Which was 32 years ago, we make sure that it is in our DNA, in what we do, that we do well, that we want to grow, to protect, and to leverage our clients' wealth. Basically, that was the motivation of how I got into the business and to help our clients over the last 32 years. So.
I love that you said you learned from mistakes. Isn't it great that when we can learn from other people's mistakes, whether it's friends, family, or other people, because I think that when you can take that approach and learn from mistakes of people in the market and bring that to your clients and say, look, not that I've made mistakes, but let me tell you what other people have done out there. I see people making mistakes in growing and protecting and leveraging, and that's what I want to bring to you as a client. And I think that is so important because if you feel like you've attained to know it all, then that's the time that you're going to topple off of that high tower, isn't it?
Yep. And interestingly, Mike, the title of the book that I wrote a couple of years ago is entitled "The 10 Financial Mistakes You Should Avoid." I've always said, If you make a mistake, it's costly, but if you learn from someone else, you are smarter than everybody else because it's free.
Yes. Exactly. Awesome. So let's dive into some of the ways that you are working with your clients to help them grow and protect retirement. What are some of the main strategies that you have come to learn and be proficient in for really maximizing growth, but more than just maximizing, it's maximizing growth while safeguarding? Because I think that so many times people go, ooh, I want to maximize, but then here comes risk. And when you have market volatility, there is some risk involved. So you are showing your clients how to maximize growth, but at the same time, safeguard as much as possible against market volatility. Where do you start in teaching your clients in that?
Well, firstly, the cliche, which I say most people misunderstand the cliche, is obviously diversification. Is just critical in different strategies that we use to help our clients in growing and safeguarding our clients' wealth against mainly market volatility. And we actually graphically explain it in our corporate logo, which is our yellow triangle. At the top half of our triangle, we usually use mutual funds, ETFs, which is exchange traded funds that are liquid, to grow our clients' wealth to beat inflation and taxation. And the bottom half of the triangle represents the foundation of our client's financial house. The foundation will have some kind of a guarantee of principal or guaranteed income. And we do this by transferring risk to insurance companies by using 5 different types of annuities to grow and to protect their wealth.
That's a lot to unpack there. So I want to kind of dive in a little bit. And I feel like a lot of people even misunderstand what diversification really is and how diversified they should be. Because by definition, diversified might mean you could have your money in 327 different types of funds or accounts, but you're not saying to do that. You need to kind of keep it tight, right?
Correct. Yes. There are just so many things out there, but we try to stick with things that actually had proven to work over our 32 years of experiences, based on the strategies that we put it nicely in to explain in our corporate triangle. So.
Yep. And I know that we want to dive into this as we continue, but I always like to comment when I hear words that kind of raise a level of comfort for me, which is guarantee of principal, guarantee income. So I want to dive into that because I feel like so many people are so tired of opening up their quarterly statements or watching the news and just watching their portfolios getting hit with volatility. So I know we want to dive into that, but we can't get away from uncertainty in our economic times. So we can't control it. And sometimes that frustrates us because we want to control things, but we can't control inflation and the economy. What are some of the recommendations that you come up with your clients to make sure that your clients that are planning for retirement kind of have as much of a secure financial future as possible?
Well, firstly, I think we have to understand, the meaning of uncertain economic times, and the way we like to explain it is there are financial storms. There are basically
Yep.
six of them. The six of the major financial storms that you got to recognize. Some of them, historical U.S. Government overspending, dangerous deficits, excessive inflation, healthcare costs, and so forth. And the way we use diversification in our practice is that we explain in our corporate triangle is combinations of mutual funds, ETFs, real estate, gold, silver, commodities, different types of annuities, and even life insurance to grow, to protect, and to leverage our clients' wealth. And as I said earlier, we use it in our corporate triangle to graphically explain it to our client on what's the meaning of diversification. So.
Some of those things you mentioned about the storms, like deficit and record debt. Um, and then the next one you said was increasing taxes. And I feel like so many times people don't even realize the connection with that because we hear that deficit of trillions and trillions of dollars and we kind of can't even relate to it. It's so big, but we know it's growing, and we know that the only way to address the deficit, which has a lot of negative ramifications, with our credit, viability or borrowing power as a country, but the only way to kind of fight that is to lower your spending, which we know the government won't do that, and the other way is let's chip into that with raising taxes. Well, that becomes one of those storms, right? When we start seeing deficit and debt, and then we notice that leads to taxes, which can lead to inflation. That is that pin in the point that you're bringing to your clients to say, because of these things, we need to make sure that we're putting as many protections in place.
Yep, you're absolutely right. I mean, we have no crystal ball, right? But
Yeah.
it is how we look at the future. And I've always said half of life is preparation, right? Is to
Yep.
be prepared for the upcoming storms that we have. So.
And then also the other thing that I feel like sometimes people that are real do-it-yourselfers just like, okay, good, I hear about those storms, I'm going to go out and I'll figure it out on my own. The problem is you don't have decades of experience like you do. So what's the importance of kind of working with someone like yourself to make sure you're accomplishing these things and have a actual blueprint and game plan in place?
Yeah, I think we bring to the table the wealth of experiences over our 32 years. We have an incredible team, and we are really team player. And in the words of King Solomon, one of my favorite quotation from King Solomon, from this wise king, is that in the presence of many advisors, your plan
Hmm.
will succeed. So hanging around with the correct advisors are very, very important. And obviously, we have incredible advisors, that we can reach out to in the strategic partnership with all the different mutual funds companies, BlackRock, Franklin Templeton, Invesco, Janus Henderson, and all that. And from all our strategic alliances is where we pray about it. We get wisdom from above, and we help our clients to grow, to protect, and to leverage their wealth. So.
I love it. That's so awesome. Let's go a little bit deeper into that diversification, without getting into details or making recommendations or anything. But I know that you mentioned, gold and silver and ETFs and real estate mutual funds and all of these different types of things, from annuities and life insurance. I think that one thing that comes to my mind is the word combination. And don't tell us, well, the best combination is this percent of stocks, bonds, mutual funds, because it's different for everybody. And you can never take a templated cookie cutter approach to saying this is our, formula and it works for everyone, because it doesn't. But talk a little bit about how you are going to analyze what a client needs and then make the right combination of some of these recommendations to make sure they're properly diversified.
Yeah. So, there's no one client is exactly the same. Most of our clients are pre-retirees and retirees, and usually when they come in to see us, whether it's a referral or coming to one of our meetings, we'll have a confidential free consultation, and from there we will know about the client's objective, their goals, what they want to do, and depending on what they want to achieve and their understanding of risk, their understanding of their objectives, that's where we provide our recommendation as a fiduciary. And there's no one particular strategy. Sometimes it is a combination of strategies to help them to grow and to protect their wealth, given our many, many strategies that we have.
You mentioned fiduciary, and I know that sometimes people throw that word around a lot, and it might not have the full impact to someone hearing that for the first time. So talk a little bit about what that actually means, because from my perspective, when I hear it, it means that you are legally obligated to do the right thing for that client, right?
Yes, Mike. And unfortunately, some advisors are not fiduciary,
Yeah.
and we uphold obviously the fiduciary standard, meaning what we recommend. It is not in our interest. There will be serious issues. We have to make sure that we know our clients, right? To know them well. So we have what we call a financial planning guide that we use for our clients to be prepared for our meetings. And the more prepared they are, the better it is, because the more we know about what they want to accomplish and all that. And that's where we come in as a fiduciary to recommend the correct strategies for them to help them to grow and to protect their wealth. So.
Yep, that's super, super important. So we've talked about diversification. Let's talk a little bit about risk management. Explain how you approach risk management and how you help your clients mitigate these risks as they approach retirement age, because I think that risk management is kind of like somewhat important when you're in your 20s, and getting a little bit more important when you're in your 40s, and then it starts getting really important as you approach retirement age. So how do you approach that when you're advising your clients?
Yeah. So my comments to that, Mike, is risk management is critical in retirement planning, because no one wants to lose money with the hard-earned money. Individuals, both retirees and pre-retirees, have many opportunities to mitigate the financial risk. We always tell our clients that in life, we cannot totally avoid risk, but it's how to mitigate the risk.
Yeah.
So besides diversification in different asset classes, we tell our clients, educate yourself and know how each strategies help to grow and to protect your wealth. And in our last 32 years of experiences, we discovered that most people take on too much risk and have no idea how to grow their wealth and protect their investment to beat inflation and taxation. And always remember the words of Warren Buffett, right? Warren Buffett said, rule number one is not to lose money, and rule number two is never to forget rule number one, which I think is words of wisdom. So.
It keeps it simple there, doesn't it? If you are focusing on don't lose money, and then the next step is remember, don't lose money. Did I stutter? So that's really, really important. And I think that ties in so well with risk management, because so many times people will kind of look over the fence and see, oh, well, look at that fund getting this return, or look at this person, my friend that I met down at the gym that said he gets this return. But those higher returns sometimes can either have a lot of fees associated, but like along with what we're talking about here, a lot of risk. So mitigating. Now Now, I would like to ask you, how do you define mitigate? Because I feel like so many times people hear that and they go, oh, eliminate risk. Nope, we can't eliminate risk ever, just like we can eliminate taxes, but we can mitigate them. So how do you advise your clients on mitigating risk?
Well, obviously, you said it right, Mike, is that, in life, we know we can never totally eliminate risk, right? I mean, to live life is to face risk. But we investors or retirees or wherever, what stage you are in life, you have an opportunity to reduce or to mitigate risk by using different strategies. And there are a lot of different strategies. And unfortunately, I think most people just fail to spend the time and to mitigate the risk or to educate and to realize that there are just many different strategies out there to be aware. And our job is to educate and to make clients aware and prospective clients aware that you have an opportunity to take action and to reduce or to mitigate the risk.
Yeah. So talk a little bit about some of these recent latest trends in retirement and wealth planning, because I feel like someone can go to our trusty friend Google and put in, retirement and wealth planning management, and you're going to get trillions of answers and get confused. So what are some of these latest trends and how should people be approaching them?
Right. Yeah, good point, Mike. Unfortunately, the what is on the internet can be for or against you, and you got to be careful. There's some really good stuff, and there's some really bad stuff. And unfortunately, not everyone is a fiduciary, and not everyone is. They have all the different strategies or license in all the strategies. And the analogy that I like to give is, if all you do all day long is to sell apples, you just say never eat orange. And if you sell orange, you say never eat an apple, which is unfortunate. So to just answer your question, obviously, we have many different types of ETFs, which are exchange traded funds. The latest innovation and that you should be aware of are what we call buffering strategy. To grow and to protect your wealth. And buffering is like driving a truck with shock absorbers, right? The buffering strategies will help you to cushion your investment portfolio when the stock market is volatile. And one of the 5 strategies that we use, which is a relatively new innovation, is designed actually to beat the S&P 500 if the market is up, and to have at least a 20% buffer or protection if the market is down. And in the area of like risk management in long-term care, there are many updated strategies using a combination of life insurance with long-term care rider or annuities with long-term care rider without medical underwriting that many people are not aware of.
And you mentioned one of those annuities, and we don't need to get into the details of them, but aren't I correct in thinking that that's one of the protections and guarantees that we were talking about earlier, where you might participate in the upside, but also if the market crashes, then you're not going to lose money, and that's a nice feeling, right?
Correct. Yeah. So what you've got to be careful in my disclosure and my explanation is, remember, there are 5 major annuities, right? And all of them are all different. The problem with most people, Mike, is most people just get one annuities. And usually they end up with the wrong one because they do not realize that there are 4 others out there. And you're right, Mike. And one of the annuities that you just mentioned has the ability to guarantee you'll never lose your principal because you transfer the risk to the insurance company. And if the market goes up, you're not going to get 15%. You're going to get, for example, you may get 9.5 or 10% with a certain cap. So that is one features of one type of the annuities among the 5. So my advice to most people is just educate yourself on all 5 annuities, and they are all different, designed differently to grow your money and to protect your wealth.
That's huge. And that goes right back to what we were saying earlier. There is not one cookie cutter templated solution for every single person. It's all about being that fiduciary and learning what the client needs and then providing options so they can make an educated decision. And I think that is so powerful. Well, Stephen, it's been great chatting with you about how you serve your clients, growing and protecting and leveraging their wealth. If someone is interested in learning more and then also reaching out and connecting with you, what's the best way that they can do that?
Well, in today's world, you can call us. Our number is 973-218-9600, or just go to our website. We have all the incredible information, our webinars, and all our information. Or you just can go to our website, which is Stephen, STEPHEN, NGFG.com, and you can just reach out to any one of our team members, and we just love to help you.
Excellent. Well, Stephen, thank you so much for coming on today. It's been a real pleasure talking with you.
Thank you so much, Mike.
The views expressed are not necessarily the opinion of Stephen Eng and should not be construed directly or indirectly as an offer to buy or sell any securities or services mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should only be relied upon when coordinated with individual professional advice. Securities and investment advisory services offered through Osaic Wealth, Inc., member of FINRA and SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.